We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kriti Gupta, stepping in for Kaylee Lines. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, a hawkish Fed weighs on crypto, and if a slew of technical charts are right, Bitcoin may be poised for another downward move. Michael Purvis of Tal Bakken shares his bearish views.
And sanctions, lawsuits, and investigations are clouding the outlook for digital assets. We'll weigh the regulatory risk with Ari Redbord, a former Treasury official.
Plus, the true value of the crypto market isn't the trillions you may think. Bloomberg crunched the numbers with a team of skeptics, economists, and researchers.
That's all ahead, but first, let's take a quick look at the snapshot of the market because Bitcoin once again trading below that key 20,000 level for a second straight day. And of course, you see that pressure down about 2.7%, but put this in a volatility adjusted context. Historically, you need a drop of 4% or a gain, I should say, of 4% on an average day for that volatility to really make sense. So you can see in that perspective, in the historical context, Bitcoin's volatility a little bit muted in today's session. That isn't, of course, stopping it from having broader ripple effects across the stock market. Take a look at some of these crypto exposed stocks. Coinbase, of course, the crypto exchange, down to the tune of 1.6%. Even some of the names that are exposed to crypto in that they simply accept crypto as payment. Think Overstock, for example, or even PayPal. Those kind of names are down as well. Overstock down about 0.5%. But the real pain, the real selling pressure is going to be in the miners. Think Riot Blockchain, Marathon Digital. When Bitcoin is up, those are the names that have the most gains. In reverse, they are actually the ones suffering the most, down about 4.3% in Riot Blockchain shares, Matt.
All right, speaking of historical perspective, I pulled up a little seasonality here on Bitcoin. Of course, it doesn't have the history that most risk assets do. It's only been around since 2009, 2010. But at least in the last 5 years, September has been a bad month for Bitcoin. You can see especially 2009 was rough, and the average drop for the month is about 7.5%, 8%. So it is historically inclined to fall in September, and it has come down below the $20,000 level, as Kriti was saying. Market participants, though, anticipate more macro headwinds in the space.
Bitcoin price being under 20,000 obviously isn't good for anyone.
Bitcoin has a little bit further to fall.
The crypto markets more broadly have certainly expanded into broader tech over this last cycle.
We are pretty close to the bottom.
I actually think the capitulation phase is over.
Inflation, as well as what risk assets do in a hawkish Fed.
Tumultuous, distressed environment.
I don't necessarily think move to proof of stake is a great thing for Ethereum. We think that Ethereum very well could get back to 1,000 or even lower.
Long-term investor is still paying attention to the fundamentals.
In the long run, we're going to be doing just fine. Everything depends on macro at the moment.
All right, so some conflicting views, but that's understandable because how do you value it? It's not your father's valuation method. There are no Excel spreadsheets or discounting cash flows that you can look at. So how do you value cryptocurrencies in general? Bitcoin especially. Bloomberg's Sonali Basak is here to explain one way.
Well, Matt, there are many ways to do it. One way to look at it is through technical analysis, using historical price movements or trading trends for a sense of how valuation could pan out moving forward. Just yesterday, Sven Henrik of Northman Trader said he believed that Bitcoin is at risk of breaking an upward trend. And if we look at the momentum, it is to the downside more recently. Bloomberg's data shows that a key level is 19,789. And another way to look at it is by using one of Lyn Alden's preferred methods as a store of value. Let's do this by comparison to gold. Assume 20 million Bitcoin outstanding. And if Bitcoin's market value gets to half of the global value of gold, or up to 2% of global net worth across assets, and gold is an estimated $10 trillion market, then each Bitcoin would be $250,000. But if Bitcoin only achieves 1 to 2% of the value of gold, each Bitcoin would be worth $5,000 to $10,000. By doing this, we're also assuming that global net worth is 400 trillion, and this is one percentage of, or one way to find out what it's worth as a percentage of that global net worth. There are many other valuation methods, but another one that Lyn Alden had pointed to is comparing Bitcoin to national currencies. And you'd have to think about how much economic activity actually occurs in Bitcoin, because there are many users and many of them might also not be legitimate. The market cap has fluctuated tremendously. Remember, it had shot up past $1 trillion, more than the GDP of some countries, but it's disproportionate to the amount of transactions across the network in terms of how much it's fallen fallen since then. Now the market value lies below $400 billion. That has been a harder way to value crypto, guys, at least for now.
Certainly a skeptical way to look at it. Let's get another skeptic's take. Michael Purvis joins us right now, founder and CEO of Talbot Capital Advisors. Although I have to say, Michael, right now, even historically bullish crypto traders are worried about another down leg. What do you see?
Well, look, Matt, since January, I've been pretty bearish of Bitcoin. I was, when it was 42, I was targeting 30. When it got to 30, I targeted 20. And when it got to 20, I kind of took profits. But then just last week, re-entered a short trade with a target of 15. The one thing I do want to make clear is that I don't have really a fundamental view one way or the other on Bitcoin. I suppose looking at it as a percentage of gold's the amount of above ground gold's value, is certainly one way to look at it. But I think, to my mind, the more abstract the fundamentals, the more important technical analysis is. And we do now have, 10 years, a little bit more than 10 years of trading history, right? And so what really got me bearish was really, again, nothing to do with, a fundamentally bearish view or a fundamentally bullish view. It was simply the fact that longer term momentum was really starting to break in late January. And this one particular signal I was focused on, it had done this 3 times prior. And each time Bitcoin corrected 60 to 70% over the next anywhere from 4 to sort of 10-month period. And, right now, we went from 42, which is when that signal developed in January, that would bring you down to about 15,000. But I actually think there's a chance.
And do you buy there? Do you buy there, Mike? I remember when it went from 1,000 to 75, and people said, this is the end. Then we went, of course, to 17,000. When we dropped from there to $3,000, everyone said, this is the end. Then we went to 65,000. When we dropped from there to 20, you're saying 15. Do you get in there?
I'm not, I think I'll cross that bridge when we come to it. It depends how we get there and what's sort of happening, more broadly. But there is one important thing about this 20,000 level, big round number of 20,000, which is that if you remember a couple of years ago when we soared through 20,000 and we took out that 2017 high, that kind of set the path to the lifetime highs of 60, 65, 66. That concurred with basically a lot of institutions coming around and saying, hey, we're taking Bitcoin seriously now. Like, we're making allocations, or at least considering making, significant allocations to Bitcoin or to its ilk. And I guess one of the problems I have right now, just in terms of flows coming into Bitcoin, is that what we've learned over the last year is that Bitcoin hasn't been uncorrelated. It shares a reasonably high correlation with the NASDAQ or the broad, other risk assets. And so I really question, since it hasn't demonstrated its ability to be uncorrelated, I question whether institutions are going to come in and say, hey, if it gets to 15 or gets to 17 or 18 or 12, whether they're going to go rush back to committee and say, hey, here's a dip we can buy. Because the thesis back 3 years ago, I think, was, generally that, hey, this is an uncorrelated asset. It can be an inflation hedge. It's
let me hop in here. Speaking of uncorrelated assets, let's put this into context of the Federal Reserve here. It's all about rates at the moment. How do rates and crypto correlate or don't?
Well, I was just early this morning, if you look at the NASDAQ, that has a pretty clear correlation with rates, and Bitcoin has a pretty clear correlation with the NASDAQ here, right? And so I think if you've looked at a lot of stuff that really got inflated, post-COVID shock in the spring of 2020, with this massive, suppression of interest rates, massive dovish pivot from the Fed, you looked at ARKK, a lot of speculative tech stocks going to very, very aggressive levels. Well, Bitcoin was also part of that as well. And so I think it is going to be very vulnerable to Fed hawkishness. And the one issue is that because it's, again, I come back to this thing that it hasn't demonstrated its utility as an inflation hedge. So I question, if you really just need a levered play on the NASDAQ, well, there's a whole lot of ways to do that, right? And I think the question about how you really value Bitcoin at 15,000 or 10,000, it's going to be really, really problematic. But
Wait,
Critty,
so
you're
Michael,
absolutely,
if you are saying that it's not doing its job as a leverage play or even as an inflation hedge, then what do you actually do with Bitcoin? Do you just not buy it, or do you actively short it? We got about 30 seconds here.
Well, to answer your question succinctly, I'm short it. But again, I'm looking really at technicals here. I sort of sidestep the fundamental discussion because I don't think I'm honestly not sure really how to analyze the fundamentals of it. So I kind of just look at it. It's an important asset, but what's clear is that downward momentum from a longer term perspective is very bearish right now, and so I'm just kind of riding that trend.
Michael, thanks so much for joining us. Michael Purvis there of Talbacken Capital Advisors. Now coming up, Ari Redbord, head of legal and government affairs at TRM Labs, a blockchain intelligence company.
And the trillion-dollar question, skeptics, economists, and researchers weigh in on how to measure the true value of crypto.
Yeah, it could be just a multi-billion-dollar question. To access all the latest data on crypto and the news as well, type CRP Go on the terminal. This is Bloomberg.
What they've done might be unconstitutional. It sounds like Coin Center may be gearing up for a challenge on those grounds. I think that people have a right to financial privacy, and there are a lot of legitimate people using this service for legitimate financial privacy reasons. And I think that we'll see if this survives a challenge.
That was Kraken CEO Jesse Powell speaking with us earlier this month after the Treasury Department sanctioned Tornado Cash. The cryptocurrency mixer was sanctioned after North Korean hackers relied on it to launder illicit gains, according to the officials. The sanctions bar American companies and individuals from doing business with Tornado. Joining us now is Ari Redbord, head of legal and government affairs at TRM Labs, a blockchain intelligence company. And Ari, we were talking with Jesse about this because one of the fundamental reasons for the invention of Bitcoin is to skirt this kind of monetary censorship. And yet, here we see all of the companies that have been involved in it for, the first decade of its life, following Treasury orders. Does that make sense to you?
It does. It does for a number of reasons. Look, I think the way the U.S. Treasury was thinking about these sanctions is they were going after what they saw as the chief money laundering tool for North Korea's cyber criminals. And, we've seen these huge hacks in the crypto space over the last year or so, which in many respects, when they involve North Korea, moved this issue from sort of a fraud and financial crime issue, which is still very serious, to really a national security issue. And I think that the challenge now that we're seeing in the space is, and this was to Jesse's point, look, we have to figure out ways to go after illicit actors like North Korea who are taking advantage of decentralized tools, but at the same time not affect what he called sort of, legitimate users, because there is, more and more need to have transactional privacy as we move into sort of this new open financial system. So it's really figuring out sort of how to walk that line between stopping bad actors from using sort of, these tools and allowing legitimate users to continue to use them.
I just want to point out it doesn't get any more private than duffel bags full of Benjamins. I mean, laundering dollars is surely much easier because you don't have a blockchain to trace it all. I get that Tornado kind of helps people make the blockchain less effective, but what do you think about a company like Tether, which has been resistant to Treasury's demands to freeze any assets that have touched Tornado? Does that make sense, or do they have to do it?
It does make sense, and I'll tell you why. Look, I think there's a couple ways if you are a crypto company, and that means a stablecoin issuer like Tether, a DeFi protocol, like some of the ones that have been involved in some of the conversations around this. Look, you have to, if you are a U.S. person or U.S. entity, you have to abide by OFAC sanctions. It's very black and white. And even Tether, what Tether is saying in their statements is, hey, look, we're going to block the addresses that are on what they call the SDN list, the specially designated national list, the OFAC sanctions list. We're going to block those addresses. But what we're not going to do is go ahead and take a step further and block addresses that have transacted with sanctioned addresses. And I think sort of Tether is saying, look, and a lot of the crypto industry is in line with this, and that is, look, what we need before we take that next step is more guidance from OFAC, more guidance from Treasury and regulators. So what to be clear, Tether is not saying, hey, we're not going to abide by sanctions, but they are saying we're not going to take that extra step to block addresses that have transacted with sanctioned addresses. And I think this goes to sort of crypto businesses right now are all trying to navigate. And at TRM, this is what we do. We've been working with them to do this, to come up with what is their risk appetite and how can they use data to make informed decisions about which addresses to block.
Ari, you underscored the need for privacy in this sphere as well. For someone who's perhaps not as familiar with Tornado Cash and the uses for it, compare and contrast, if you will, the U.S. banking system, for example, and the privacy associated there, or I should say lack thereof, when it comes to things like tracking money laundering, for example. How does Tornado Cash or the concept rank in that?
No, look, I love the question. I was a prosecutor at the U.S. Department of Justice for about 11 years, and I can tell you that, you know, there's no TRM to trace bulk cash smuggling and networks of hawalas and shell companies and high-value art. And I think, you know, look, what the blockchain allows for is unprecedented visibility on financial transactions. It allows you to follow the funds. And on the one hand, that's a great thing, right? It allows financial crime investigators to follow the money in ways that were impossible before. But on the flip side, you know, look, as more and more transactions are done in an open way, people are going to have more and more reason to have to want privacy in those transactions. Look, you know, eventually, hopefully, we'll all be paid in crypto, right? You don't necessarily want Bloomberg to know every transaction you do with that paycheck, right? There's going to be reasons why you're going to want to have privacy more and more, and there are tools like Tornado Cash that allow for that. The problem is, again, these same tools are being used by illicit actors like North Korea, who also want more privacy in their transactions. And that's the fine line that we're seeing regulators and crypto businesses try to walk today. And yeah, please.
Well, first of all, I think that's fascinating, and we could go on about that for a long time. But it also makes me think about CBDCs. Why does the U.S. drag its feet on issuing a central bank digital currency?
You know, I think this is happening globally. I think certainly the U.S. is obviously taking its time. We've seen this conversation from the executive order and from the Fed about spending time studying a CBDC. But I think the reality is the U.S. is not ready today to say, hey, look, CBDC is even the right move here. You know, compared to, you know, stable coins and cryptocurrencies and other types of assets, you know, in the private space. So I don't know that it's as much dragging its feet as really kind of trying to study and understand the issue. I think there's a narrative that sort of the U.S. is behind China, in particular in sort of the CBDC space race, if you will. And I think the reality is still based on the hegemony of the U.S. dollar, and that could change. I think the U.S. is sort of very much still in the game, but it really has to decide whether or not it's a country that's going to move forward with a CBDC. And I think that's a very much we'll see situation at the moment. All right, very cool to get somebody with your insight and experience on the program. Really appreciate it. Hope we can get you back. Ari Redbord there, Head of Legal and Government Affairs at TRM Labs. Now be sure to check out our Bloomberg Crypto podcast, which dives deeper than the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg. This is Bloomberg Crypto. I'm Matt Miller with Kriti Gupta. Kaylee Lyons is off this week. Let's get down now to some crypto stories that caught our eyes this week. Another ex-regulator is flocking to the crypto space. Former SEC Chair Jay Clayton is joining venture firm Electric Capital as an advisor. It comes at a time of increasing regulatory scrutiny for the industry. Clayton is already an advisor to crypto custody firm Fireblocks and crypto fund manager One River Asset Management.
And a fugitive crypto CEO has been arrested in Albania, according to Turkish authorities. Faith Ozer and the other founders of cryptocurrency trading platform ThoughtX are accused of establishing a criminal organization, fraud, and laundering. Turkey says it has started the process of extradition.
And that $2 trillion wipeout in the crypto market may not be an accurate number. While crypto's market cap plunged from $3 trillion at its peak to about $1 trillion, the true or realized value has held steady in a narrow band. That's because market cap reflects all the things that can amplify froth, such as leverage, wash trades, and manipulation. And to talk more about that, with us here on set is Vildana Hajric, Bloomberg Cross Asset reporter, who's done so many awesome stories on crypto. Thank you very much, because we read these all the time. Let's talk first about the valuation, because this is sure to be controversial. I'm sure you've probably gotten a lot of emails on it already. How do you
Twitter
go
hate.
about exactly, and the Twitter hate, which you can ignore. How do you go about valuing the whole entire crypto space?
So if you think about what market cap actually is, it's just you're taking all of the coins that are out there in circulation and you're just multiplying that by the latest price. But there's so many issues with that number, because you might have some projects where you have a founder come out and say, okay, here's my project, it's got 20 million coins. But in reality, the founder actually owns the majority of the coins, or they're just not moving. They're so-called dormant coins. They just haven't been used. They haven't been moved out of a wallet in 5 or more years. And so
even Satoshi, right?
Right, even
sitting
that.
On,
exactly.
What, $1 billion worth of Bitcoin.
So you get this sort of inflated number where, if you think back to last year when crypto prices were still rallying, you had a lot of headlines saying, okay, the market has reached this almost $3 trillion valuation. And in reality, maybe it was much, much smaller, because you need to be accounting for froth and all these other things.
So that feels intuitive when you talk about it from how you talk at a stock market cap, for instance. I'm curious, what would be the right way then to calculate the market value?
Well, where I started first was I called a crypto skeptic and I asked, is market cap actually a good number of measuring the so-called true value of cryptocurrencies? And he said, no, absolutely not. It's a totally BS number, although he used much more colorful language. But
you get it.
Yeah, and we won't say it here. But one way to measure, just like I wanted to look at participation. One way to measure it is just how many people are actually part of the crypto ecosystem. So we had a survey from the Federal Reserve, for instance. They said something like 12% of U.S. adults either handled or traded or invested in cryptocurrencies. A Pew survey showed 16%. So that's something like 53 million people actually participating. So it's definitely not nothing. And then the more I talked to researchers, and I actually spoke with some crypto economists, and a lot of them were telling me to look at realized value. And that's just a technical way of saying, okay, crypto is maybe worth $875 billion.
875 is the number in billions. By the way, Satoshi, I think, would have about 20 billion. But thank you so much, Vildana Hajric, for that reporting. That's crypto. This is Bloomberg.